Hello, my name is Jason Hulich, and as Head of Real Estate and Funds Management at Centuria, I'd like to welcome you to Centuria Industrial REIT's first half 19 results presentation. Centuria Capital Group is a specialist investment manager with $5.6 billion of assets under management. In recent years, we've been actively increasing the size and quality of our investment products to enhance our market share and identify opportunities to create value for unit holders. Real Estate Funds Management is the largest component of the group's platform, with $4.8 billion of assets under management. Centuria Capital Group has a track record of over 20 years in real estate funds management, and our vertically integrated property platform, servicing both listed and unlisted real estate businesses, remains integral to Centuria's ongoing operational activities. CIP has now operated under Centuria Capital Group structure for over 2 years, and since its integration into our platform, the team has executed on initiatives to significantly reposition the portfolio into what is Australia's largest income-producing, pure-play industrial REIT. Included in the S&P ASX 300 index, CIP comprises 41 high-quality industrial assets in key markets around Australia and accounts for around 21% of the group's assets under management. Centuria Capital Group continues to align its interests with CIP's existing investors and remains the Trust's largest investor, having increased its holding in first half 19 to 24.2%. During first half 19, Australian industrial real estate has remained one of the most in-demand asset classes. Domestic and offshore capital continues to pursue opportunities to gain exposure to the sector. There continues to be evidence of increasing prices being ascribed to the land component of transactions, which is leading to instances of increasing economic rents. Broadly speaking, tenant demand for quality industrial property remains high, particularly for assets located in infill locations, close to key infrastructure, or providing the flexibility to integrate specialised fit-out requirements that align to technological advances, automation, and shifting labour requirements that are influencing tenants' daily operations. Under Centuria's management, we've grown the portfolio's assets under management by 20%, increased NTA by 13.2%, reduced gearing by 610 basis points, and provided unit holders with a total return of 26.3%. Strategically, we will continue to position the portfolio through selective transactions, active asset management, and capital management initiatives to capitalise on opportunities within the changing landscapes across the industrial real estate sector. I'd like to thank you for your interest in the Centuria Industrial REIT and now hand over to CIP's fund manager, Ross Lees, to present the first half 19 results.
Thank you, Jason. The first half performance for CIP has been pleasing, with our team continuing to deliver on key priorities for the portfolio. Leasing momentum has continued, with occupancy now increasing to 97.1% and only 1.5% of the portfolio expiring for the remainder of the financial year. The largest contributor to the leasing result was from our Victorian portfolio, where 80% of our leasing in the half was completed. This has improved occupancy in this market to 96%. Conservative capital management is a core tenet of Centuria's management philosophy, and since assuming management of CIP in January 2017, we have now reduced gearing by over 6% to 37%, and in the half we also further diversified CIP's lender pool and extended the tenor of debt. Delivering returns for unit holders remains the core focus of our team, and our return on equity, being the distribution paid to unit holders plus the change in NTA, was again strong at 15.8% for the 12-month period to December, and we're on track to deliver our FY19 earnings guidance. We'll move now to our financial results. Gross property income increased in the period as we received rental from recent acquisitions. Total revenue was flat as the increased property income was offset by foregone dividend income following the divestment of CIP's holding in PropertyLink in August. Like-for-like income was also flat for the period as the portfolio absorbed rebased rentals following record leasing volumes last financial year. Earnings per unit and distributions per unit were in line with our guidance and were lower than the same period last year, largely due to the effects of deleveraging the balance sheet. Finally, return on equity was a standout metric for the period, with a 12-month return of 15.8%. Turning now to our capital management. Since commencing management of CIP in January 2017, we've had an ongoing focus to improve CIP's balance sheet. Gearing has now reduced to 37% and has steadily trended downwards over the past 2 years. $210 million of new debt facilities were entered into during the half, including $60 million of increased capacity. Following this refinancing, CIP has headroom of $65 million with no further maturities until May 2020. Our debt is conservatively structured with a diverse pool of high-quality lenders. Serviceability of CIP's debt remains strong, with an interest cover ratio of 3.8 times and almost 80% of CIP's debt either fixed or hedged. Now to the property portfolio. This slide provides an overview of CIP's portfolio composition, including key metrics and the geographic spread of our assets. With a portfolio value of $1.2 billion invested entirely in industrial assets, CIP is positioned as a leading owner of Australian industrial real estate. Our portfolio is well diversified, with critical mass in each of our core markets and a strong weighting towards the dominant Sydney and Melbourne markets. Continued leasing momentum has improved our metrics, with occupancy increasing to 97.1% and our weighted average lease expiry at 4.7 years. We'll look at these results in more detail on the next slide. Our leasing momentum has continued into FY19 with over 65,000 metres leased in the half, representing 8.2% of the portfolio's lettable area. Clearly demonstrating our team's hands-on approach, all leases that expired in the half were either renewed or have already been leased. This leasing effort has improved the portfolio's occupancy to 97.1% and leaves only 1.5% of the portfolio expiring for the remainder of FY19 and less than 20% expiring over the next 2.5 years to the end of FY21. We will remain focused on leasing our existing vacancies to maintain high occupancy and continue to actively engage with our tenants to meet their needs and maximise retention within the portfolio. A significant amount of our leasing in the half has been achieved in our Victorian portfolio, which has been a primary focus over the past 2 years. Over the half, we've completed over 50,000 square metres of leasing in this portfolio and over 164,000 square metres over the past 2 years, which represents 70% of the overall Victorian portfolio. This leasing success, combined with strategic acquisitions of $79 million and the divestment of lower quality assets for $40 million, has driven a major repositioning of this portfolio. Occupancy has now increased to over 96%, with the WALE almost doubling over the period to 4.4 years, creating a more stable income stream into the future. Turning now to our valuations. Net tangible assets, or NTA, have continued to grow with an increase of 3.9% per unit during the half. The growth in NTA has been driven by revaluation gains of $43 million. High demand for industrial real estate in Australia is continuing to drive capitalisation rate compression in the sector, particularly for well-leased East Coast assets. This trend is demonstrated in CIP's valuations, with over 90% of the revaluation increase for the half coming from CIP's New South Wales and Victorian portfolio. Whilst the broader market strength has underpinned valuation growth, it's pleasing that a number of the gains came from assets that also benefited from strong leasing outcomes. With the weight of capital looking to invest in the sector, we expect to see further capitalisation rate compression continue in 2019. Looking now at our transactions in the period. We were active in transactional markets during the year to improve the quality and scale of CIP's portfolio. Our acquisition philosophy is simple. We look for high quality assets in the right locations that are the right size to meet the needs of our tenant customers. During the half, we acquired 4 high-quality properties for $112 million that are complementary to CIP's portfolio. The properties are leased to high-quality tenants in locations that are supported by key infrastructure connections that will underpin long-term demand. We've also continued to divest assets that no longer meet our investment strategy. Divestments in the half totaled $56.3 million, with with CIP achieving strong realised returns on these assets. Our team will continue to identify and act swiftly on investment opportunities as they arise to continue to improve and grow the portfolio. Moving now to our strategy and guidance. The strategy of CIP remains simple. We seek to deliver investors with income and the opportunity for capital growth from a high-quality portfolio of Australian industrial assets. As Australia's largest income-focused industrial REIT, CIP remains well positioned to benefit from increasing demand within the Australian industrial and logistics sector. In particular, demand for infill assets or those closely located near key infrastructure continue to generate interest from a variety of domestic and offshore capital sources. Importantly, evidence for demand in this type of industrial space remains elevated from economic and thematic tailwinds across e-commerce, last-mile logistics and manufacturing. With $1.2 billion of total assets and a high-quality portfolio that is well weighted to key industrial markets, we are well positioned to deliver ongoing value to our tenant customers and unit holders. We are pleased with CIP's first half result and reconfirm CIP's FY19 guidance of 18.5 to 19 cents per unit of distributable earnings, with distributions of 18.4 cents per unit. That concludes our presentation. Thank you for your interest in Centuria Industrial REIT.